Great to have you here with us, Veronica. You are viewing the current volatility as an opportunity to reposition. And we've kind of heard this from a few strategists and portfolio managers talking about this as the great repositioning or the great rotation, if you will. Walk us through how you're doing that.
Yeah, absolutely. So we've gotten a bit of a rocky start to the year. And with this pullback that we've seen in equities, it's a great opportunity for investors to have that chance to add to equities again. All through the past couple of years, we've just seen those equities march higher, and there hasn't necessarily been a great buying opportunity for investors. So anyone who's been having cash on the sidelines, now is just a really great opportunity to get some better valuations, get a better entry point to add to their equity positions.
Where do you think the sectors that are inducing or at least attracting most of that rotation are right now?
Yeah, I think right now, with that pullback that we've seen in tech, we've seen some of those other sectors starting to benefit a little more. So financials has certainly done really well. We also like industrials right now. We like energy and we like communication services. So, pulling a little bit from that tech, but not too much, and adding to some of those other sectors.
Veronica, the theme of the week, it seems, if this gets enacted, is the tariff man cometh, and all those things that we've been continuing to watch from campaign now to action. It ultimately raises the question of what type of impact we're anticipating for volatility tied to tariffs.
Yeah, I think we've seen a lot of market volatility tied to, the risk of tariffs. If those tariffs do get implemented tomorrow, it could contribute to a little bit more market volatility. But I do think the market has, priced in that possibility of additional tariffs already. The market's also starting to price in the possibility that inflation will be a little stickier, maybe a little bit more elevated with the implemented tariffs.
And so if we are to see that take place and inflation be a little stickier, what does that hold for the Fed, and what's the trade-off of that? Because now we're talking about potential impact to one of their dual mandates, and then additionally, we've already seen the consumer mindset say that there is a little bit more pessimism into the system with regard to business or employment opportunities right now.
Yeah, that's exactly right. So if that inflation remains a little bit more elevated, we're not likely to see the Fed cut a ton of times this year. Our base case is that the Fed is going to be able to cut rates once more this year, but that risk that they may just be on pause for a little bit longer than we're expecting is rising the more that we see that inflation number stay elevated and that weakness and that uncertainty developing in the labor market.
So let's talk about that a little bit more. Your expectations from this week's slate of employment situation data, which ultimately will come to a head with the U.S. jobs report later on this week on Friday.
Yeah, so we're thinking that the labor market is holding steady here, maybe not necessarily as strong as it's been in the past couple of years, but we haven't really started to see signs yet of any broad deterioration. If we do see that, that's going to be a bit of a shock to the market, especially with those expectations for what the Fed may do.
And so from the areas of the market that you're anticipating the most perhaps impact, especially on the employment side, we've of course been continuing to track the changes that the Department of Government Efficiency has been making in those cuts that have come forward. Do you expect that to actually roll through to this print, and what type of broader impact do you think that holds?
It may be too early to see those impacts in this print. We might see some early impacts to it. And I think in the coming months, that's when we'll really start to see those impacts filtering through in the employment numbers, especially in that monthly jobs report.
Veronica, thanks so much for taking the time here with us today. Really appreciate it. Good to see you.
Thank you.